Hello and welcome to Commodity Champions. I'm Manisha Gupta. Well, the metal prices saw a brief uptick after China cut its 1-year and 5-year prime lending rates by 10 basis points, a move aimed at countering the weak economic data and boosting liquidity. However, the rally was short-lived as market focus quickly shifted back to rising inventories, ongoing tariff uncertainty within the metal space. Only copper has held on to its gains so far, up by 15%, while other metals like aluminium and zinc remain in the negative. We break down the key drivers behind these price moves with our expert guests. Joining us is Kunal Shah. He is Head of Commodities and Research at Nirmal. Kishore Narne is Director and Head of Commodities at Motilal Oswal Financial Services. And Amit Goel is co-founder at Pace 360. Gentlemen, hi, thank you so much for joining in. Well, it has been a roller coaster ride and doesn't seem to be ending anytime soon with the kind of influx of data, events and statements that we keep getting in from various country heads. Kunal, thank you for being in our studios today. And let me start with you first. And let's start with precious metals. We'll come to the base metals in the second segment. But precious metals clearly have been very volatile as well. Gold prices, after hitting an all-time high, have come off by nearly 10% right now. Do you see prices easing on further from here? What are you looking at in the international markets to justify that?
Okay, so we had a view that gold prices are not going to move up and they are going to remain soft for some time. And we continue with that view. Either gold prices are going to consolidate or gradually drift lower. So I'm not expecting a crash, or I'm not expecting a scenario where there will be gold prices will test $2,500–$2,600, but gradual downside from here towards $3,100 to $3,000 seems very likely scenario. And we believe that in near term, the headwinds are there for precious metal for it to sharply move up. I don't think so. It requires some very solid trigger for it to move up. So again, the escalation of trade wars by US and China, that kind of scenario will definitely cause upside. But I am of the view that the rallies in a short term are meant to be sold. And if you see from the broader point of view, 3,000, 2,950, these are the levels where you can again start rebuilding position, not for the extraordinary gain, but I'm expecting those will be the level where you again consider, start accumulating gold rather than doing it right now.
So if gold is what you're looking to invest in or accumulate, wait for levels of 3,000 or below that. Amit, what is your sense? I know you've been a bit of a contradictory view for the last time that we spoke. We've seen some profit taking from 3,500 onwards. Where do you see support and what would you advise the investors in gold right now?
Firstly, thanks for having me on, Manisha. And I'm speaking from the sidelines for the Qatar Economic Forum, so forgive me for a bit of noise in the background. It's pretty interesting here to interact with people from all parts of the world and dignitaries and financial market experts and so on and so forth. So now coming back to the question of gold. So my sense is, Manisha, that the price that we saw in April, I think it was 22nd of April when we went up to $3,500. That was more like a bubble zone for gold, because while longer term, the prices need to go a lot higher. But I think in the near term to medium term, the best of the best case scenario for gold was sort of already discounted. If you really look at the fundamental backdrop, it's not so negative for gold right now. Why? Because the dollar index, which was at 110 in January, is now close to 100. The yields, the US yields are elevated right now, but they are expected to go down over a period of time because it looks like that the US economy is headed for a slowdown. And there is still a lot of uncertainty about tariffs and about the economic situation. But the problem is not in the fundamental backdrop. The problem is with the price. So if the price of gold had been, let's say, about $2,500, $2,600 from here, looking at the macro backdrop, I would not be bearish. I would be bullish. Right now, my situation is that I'm still very bullish on gold for the long term. But for the medium term, I think it looks like that the gold should be headed lower, and I'm still expecting less than 2,000 over the next 6 to 8 months. Because it's very simple, Manisha. What becomes a safe haven for every situation and for every investor in the world no longer is a safe haven. It's more like a bubble. And that is what gold has been in that's the situation that gold has been in for the last many weeks and a couple of months.
Hmm.
So
Amit,
my
did you?
sense is that the fundamental backdrop is not going to be negative for gold, but the price action is probably going to be negative, and probably needs to come down to 2,800 or even lower than that over the next 6 to 8 months. And at some point of time, it would become very, very investable for long term, but that point is not now.
So Amit, and even as Kunal said, 2,950, you've said 2,800 in the next 6 to 8 months as a support there. But Amit, on the higher side, if the people started to invest around those levels, what is the kind of targets or return on their investment that they're looking at in the next 1 year, 2 years, even 3 years for that matter?
Manisha, for the next 3 to 4 years, I'm supremely bullish on gold. And I think the kind of scenario which we expect to unfold on a macro basis all over the world, there is going to be slowdown, there is going to be a recession, probably a deep one at that, and there is probably going to be a deep sell-off in the stock markets, deep sell-off in the risk assets. And in that scenario, my sense is that long-term government bonds, particularly in US and maybe in Germany, and gold, they will become very, very investable. Rather, they will be probably the only bull run still alive in the world out of all the macro asset classes that we track and invest in. So my sense is that once it becomes viable and once we get all the near-term alerts that gold is bottoming out, my sense is that over the next 2 to 4 years, you could see gold at 4,000 or maybe even at 4,500. I would not put any lid on the potential gold price, Manisha, because the macro backdrop, we always talk in terms of paths, we always talk in terms of probabilities. There is nothing like certainty in the global markets, but the path for a big global economic conflagration over the next few years is pretty wide. And in that scenario, gold can literally go up to any level. And we see dollar index going down over the next few years, even though we see it going up or maybe stabilize around the current levels for the near future. So my sense is that once you get those buy signals, we need to go deep into gold. We need to hold it for 3 to 4 years, and you will see more than a 25-30% CAGR easily over the next years to come, but not in the near term. I'm still pretty negative about gold in the near term.
Well, yeah, that is something that we seem to be hearing everywhere. Kunal, I want to come to you. You said 2,950 on the lower side, and as Amit says, 4,000 in next 3 or 4 years. Are you looking at that magic number as well?
Yeah, so I believe that the structural trend for gold continues to remain bullish. 2 to 3 years, I would say yes, it can. But if you ask me in 1 year, it will be very difficult because we have been constantly, focusing on that gold prices are going to test $4,000. We've seen a report by many, coming. So I don't see that scenario playing out in next 9 to 12 months. So if you ask me 2 to 3 years down the line, yes, it has a potential. There is no way, nobody can say that fundamentally gold is bearish. I agree with the Mr. Amit, but I believe this is not the right time. Like Mr. Amit also pointed out, and I completely agree with him, that this is the movement what we saw from 91 to 99. That was a bubble, that was a euphoria, that was a absolutely crazy movement. It generally never happens. I have not seen this kind of movement taking place in gold in a matter of 3 days in last 20 years. So this has happened in 2 decades. In 2 decades, this happened only first time, and it's not going to happen at least for quite a bit of time. We've seen it. So either we are going to see in a shorter term a consolidation to profit taking. Longer term, the outlook remains positive, but I will not say $4,000 in next 1 year. Perhaps 2 to 3 years, yes, it is possible.
Kishore, getting you in the conversation as well, and that is the kind of ranges that we are talking in gold. Not a great time to buy here, and it always is about time correction and then percentage correction that you guys keep talking about. What is your sense if somebody wants to include it in their portfolios now, want to invest it, want to accumulate gold? Would you also agree with what Amit and Kunal are telling us? And what is your range specifically?
Yeah, Manisha, I think one line is basically gold is structurally bullish, cyclically bearish, or cyclically you can say consolidation. So cyclical consolidation might mean 10-15% corrections here and there. So we have already seen 8-9%, 10% from the top. But it's not giving away very easily. That's one of the key indicators which is coming every time when you see a sell-off. Again, in a couple of days, we're seeing market again up around $3,500, $3,400. So I think my range is also more or less close to that. So 2,900 is a downside floor where I see anything close to that, 29, 29.50. Anything close to 3,000 is a value buying for a medium to long term investor. So where you want to actually allocate new money. When you have old money sitting on that, you're already invested, you already have 5, 10, 15% of your portfolio in gold. Whether I should book my profits and exit, I don't think so. So I think you should be holding on to that, even though there could be a 10% downside from here. That should not really bother you because that's the part of the portfolio which are there, and there is a purpose of gold being in that portfolio. So the old money which is already invested, I still say that you hold on to that. Structurally, the bullish trend is intact. Cyclically, you might see some kind of correction. So if you are a new guy who are actually going to allot new money into the gold, probably you should be waiting for 3,000, close to that. 2,900 is a bottom. Of course, you will not be able to catch the bottom. Anywhere close to 33,000, $3,100, you should be looking to put money.
Okay, so some correction is incoming and another 10% down from here. Well, that would really come into 3,100, 3,000 kind of levels, and that is a good time to buy in case of gold. Amit, let me come to you and talk about silver as well, because that's another thing that has been quite volatile. Hasn't gone up too much, hasn't gone down too much as well. Would you call it consolidating at these current levels?
That's exactly how I would characterize it, Manisha. So basically, since gold is in some sort of and it has been in some sort of a bubble zone, and since that is expected to go down, uh, silver is probably likely to outperform gold for the next few weeks and months for the very simple reason that the global economy is still holding up. We are not melting down yet. So, and which is what you've seen, Manisha. So, gold silver ratio was at 107, 108 when gold was peaking out. And now the gold silver ratio is now hovering around, let's say, 100 levels, goes up or down from 100. But what I'm trying to say is that silver has outperformed gold on the way down. But the reason why silver has not been able to do well is because gold is pulling it down and the risk on globally was pulling it up. But between that push and pull, silver just remained in a range and it just didn't do anything. It did not go beyond did not go near 34 levels at the same time, did not go down to 30 odd levels. So it's been stuck in a range. And my sense is that as the world may be headed for a slowdown or bleak recession over the next 6 to 8 to 10 months, there is a chance that silver may underperform eventually, because you know that whenever a recession comes, silver would underperform gold by a huge distance. And my sense is that gold silver ratio, which went up to even as high as 125 during the COVID recession, I think in the next recession, gold silver ratio could go up back to those levels. For the time being, I think silver is probably going to be range bound. But eventually, as the slowdown in the world becomes more deeply entrenched, my sense is that silver is going to break down. And I would expect a price of about $25 to $26 on silver when the recession sets in. But that may be a good 6 to 8 months away. Till then, it's a happy time for option sellers who can sell both calls and puts and make good premiums.
All right, so it's a profit time for gold and silver, both of these commodities. Gold could go down to 3,000, silver almost $25, $26 an ounce. But then it is buy time for all of these metals there. Amit, will thank you for this, talking about precious metals right now. And with that, we'll go for a break as well. When we come back, we'll talk about base metals. And we have Kunal, Kishore with us to take you through all of that conversation. Welcome back, and let's talk about industrial metals now, which have been quite volatile as well, between China trade data and then China interest rate cut, tariffs and tweets, and of course various conversations that we have seen between countries as well. Kishore, how would you look at the overall scenario? And actually, let me start with copper first, because that's the only one trading in the positive right now. But with the way the fundamentals are so contradicting, how would you want to include copper in your portfolio?
I think copper has been quite volatile after the back and forth on the tariffs, and yeah, certainly US actually jumping onto that bandwagon and importing a lot of copper. So which has actually made it much more volatile in the last 3 months or so. Yeah, that I think after the initial surge, I think currently the market is trying to get back onto the fundamentals. On the demand and the supply side, the market looks slightly even more bullish. So probably $10,000 and slightly higher than that is on the cards. Probably at the current levels around 856, 860 is possibly on the cards for the domestic contracts. But structurally, that's not a great place to be as far as copper is concerned. So if we are looking at 3 months and beyond, probably we are looking at copper coming down to back to around 780, 790 levels. So that's something on a medium term basis we're bearish, but on a short term basis we continue to be bullish on copper.
Hmm. Kunal, how would you look at aluminum? Because, when we started 2025, I remember a lot of people telling me, analysts and brokerages, that aluminum is in the top three when it comes to buying, when it comes to metals. World has changed a lot since then.
Yeah, so it's a proxy to your rising automotive demand. So one of the major reasons why aluminum demand has done well is because of the transition from the traditional vehicle to the EVs, and that requires much, much more aluminum than what it is. So like in a traditional car in Europe, it used to require 8 to 9 kg of aluminum versus in EV 28 to 29 kgs of aluminum. So the dynamics of the aluminum demands have changed, and EV and the clean energy seems to be the major driver for this demand, and that is not going to fade. So if you ask me, the fundamentals as compared to the copper, aluminum fundamentals are not very bullish because it's a metal. Copper production is what, 27 million tons, aluminum is almost 80 million tons. So here the difference is the production, the number of production, the amount of production coming in. Demand is also growing. Copper will outperform the complex going forward, and aluminum will follow. Aluminum won't be a leader, but the outlook of base metals seems to be bullish as per us. And we believe that the positive sentiment building up from the US-China trade war, after that we are going to see a gradual uptick in prices of raw materials, metals, and remember, China's State Reserve Bureau has clearly mentioned any time prices go down, they are going to be the buyer. They want to build their stockpiles of metals, and they have started to ease their monetary policy. No stimulus. They've been talking about it from last 6 months. As of now, no stimulus. So you have to put this kind of scenario into a picture, and I believe with the expectation of US dollar likely to decline further, that is also going to add fuel to the fire. So I'm very bullish on industrial metals, not because of the demand and supply, but because of the non-traditional factor driving them. And the overall outlook remains very positive.
Kunal, have you seen on how sometimes the metal stocks kind of diverge from the way the underlying commodity trades? I mean, today is a classic day of that, and we've seen this happen many times. How would you read into that?
Yeah, it's a very good question, because when we are talking about slowdown in China, we are talking about slowdown in US, we also have to remember the 6.5% GDP growth rate in India. So in India, most of these metals are growing at a 8 to 10% demand growth rate. So copper is growing at a double-digit demand growth rate. So it's quite exceptional. By next 3 years, the Indian copper size of the Indian copper market will be 2.5 million tons. So why Indian mining stocks are outperforming is one of the main reason is that the India's growth story, India's growth outlook, India's focus on infra, real estate is going to be driving demand of these metals. So the Indian miners are one of the best place to be in if you want to invest in the mining stocks.
All right. So when the markets go up, well, the metal stocks do go up better than what they're doing in the international markets as well, in sense of the underlying commodity there. Kishore, this one is to you. I want to come to you for zinc as well, because we've seen prices continue to see a very sharp decline, an underperformer in the pack.
Yeah, I think again in a global markets, actually the prices have been quite underperforming as power demand actually has gone down, and so I think galvanizing itself is a market which is not functioning very well, and also negative carry on the TCRC also is not a very good indicator for that. So I think once we settle down on these things, and our anticipation is that the recovery in China will accelerate beyond August and all. So probably around July, August is where most of these metals will bottom out and start to build up the fresh rally from there. So I think August is where most of these metals will turn around, including zinc.
Kishore, do you also believe that it is time to be bullish on metals at that point in time? And how much of a gain in sense of percentage would you be looking at it in these metals? And how would you stack them in sense of priority, in sense of buying?
Yes, I think when we started the I think 24 year-end report, actually that's we were looking at August is a tipping point where I think China will turn around, the Chinese economy will turn around and turn the corner from there. And so the build-up of the story will happen in July onwards as we start to see the numbers clearly. And also some of this uncertainty regarding the US and China, the duty structures will be much more streamlined. I think by the time, whatever the agreement, whether it will happen or not happen, the things will be priced into the market, and that's where actually more stability and more directionally consistency will come. And that, so till that time, the markets will remain markets will remain volatile. At the same time, it's more news driven rather than fundamental driven at this point of time.
Oh, well, absolutely. And I like the way you put it, structurally bullish, but cyclically bearish. And that's exactly what we are seeing in case of most of these metals, precious as well as base there. Thank you as always, Kishore, Narne, Kunal, Shah, for joining in and making sense of what really is happening with the metal prices, metal stocks, and of course, the international cues on how to look at them. With that, that's all the time that we have on Commodity Champions. Thank you for watching.